Hi, good day to all. This is Kelvin here. Welcome to this week edition of our weekly technical outlook on the major stock indices. We'll be covering the latest trend bias and key levels to watch on the SPX 500, the Nasdaq 100, the Hong 50, the Japan 225, and the German 40 stock indices for the week of 20th of June to 24th of June 2022. So before we start, let's take a look at the disclaimer slides first. All right. So let's take a quick look at last week performance across the globe from US, Asia, and as well to Europe. So what we could see is that last week we have another kind of disappointing week on the global stock indices where all the major stock indices across the globe uh, shape a what I call it a disappointing performance where the worst hit was continued to be concentrated in the US region where the SPX actually declined by negative 5.8%. Similar weekly decline of the Nasdaq 100 and the Dow Jones Industrial, negative 4.8%. And the worst hit was the Russell 2000, which is at negative 7.5%. And the one that is kind of a outperform in the against the rest of the world is the China-related stock market or stock indices, pardon me, which is the Hang Seng Index and as well the Hang Seng Tech Index. So even though they outperformed, they actually still closed negative for the week, which is negative 3.35% and negative 3.59%. But that's pretty common after what you see a strong performance in the last 2 weeks or so. If you could look at last prior week performance was actually positive at positive 3.43%, where the Hang Seng Tech Index actually rose almost 10% in its prior week. So it's pretty much common to see a kind of a retracement after a prior week strong performance. And pretty weak itself was the Nikkei 225. So later I'll share you on the Nikkei 225 configuration. It's actually kind of stuck within that big sideway range, down negative 6.9% for last week. And the German DAX index was down negative 6.2 percent. So pretty much similar momentum as compared to its prior week performance. So now, very interestingly, I will share you all against the technical configuration. What we start to see right now is that in terms, especially in the US stock indices, we start to see close to about 5 to 6 weeks of consecutive decline. And right now we are actually coming very soon to a tipping. In fact, we are there at the tipping point for actually a potential technical rebound, and that rebound could actually last potentially 1 to 3 months due to various key elements that I'll share with you all later. So now, before we go into the technical chart, let's take a quick look at this sector performance last week on the 11 S&P sectors that made up of the SPX 500. So what we could see is that all of them are actually in the red. I mean, given that last week was actually a pretty much dismal week, so not surprising. So the kind of weakest hit was actually the consumer staples. The defensive was hit as well, coupled with the communication services, which is down negative 4.6%, and the financials followed by the information technology, negative 4.9% each. All right, so without further ado, let's go into the technical chart, which is much more important. I'll share with you is if you look at this multi-month of decline on the SPX 500 since its all-time high in Jan 2022 has reached a key, we call it inflection level at 3580. Why this is a key inflection level? There are a couple of elements on the highlight for you is that we start to see a pretty much drastic, steep decline that started after the breakout from this, we call it a minor range resistance from 30th of May up to 6th of June, and it broke out on 9th of June over here after that release of that red hot CPI data for the month of May. So if you look at this steep decline over here, it's in terms of timing and the space, is the steepest decline that is being seen in this major downtrend that is in place since the all-time high of all-time high of Jan 2022. So what it means that this is kind of a capitulation, a leg where actually we start to see bearish sentiment is so extreme, which in turn it could actually offer a contrarian rebound or a snapback rebound to actually retrace this pretty much a steep decline in terms of time and space. All right, and also what we could see is that the daily RSI has actually reached the oversold region as well. And if you recall, last week I highlighted in my video, we're now approaching this fifth wave target in terms of the elliott wave and fractal analysis approach. The fifth wave target, that means it's usually the terminal point of a one, two, three, four, five, a five wave down move to eventually potentially end this first leg of a major downtrend, which we'll talk about multi-month downtrend labeled at wave A. So after a potential five wave down move, what we could see is potentially a 1 to 3 months of counter trend rally to actually retrace this multi-month decline. All right, that started from the all-time high of 4th of Jan. So all in all, right, we'll be watching this key support level at 3580. So what's 3580 again? A quick recap will be the former swing high of 3rd of September to this 20 what called 17th of November 2020, and as well as the standardized terminal, we call it FIBO extension of a typical fifth wave target, which is the 0.618 FIBO extension taken from the high of 4th of Jan, project it to that wave 3 low, which is 19th of May, and project it to the wave 4 swing high that kick-started this steep steepest decline within this major downtrend move that we highlighted earlier on, which is the high of 31st of May that gives rise to the 0.618 FIBO extension level, which is the typical terminal wave 5 target, which is the end of the wave 5 target at 3580. So if we were to go to the 4-hour chart, you can see from here very clearly the 4-hour chart also confluence with the low of this minor descending channel that I drawn from the high of 29th of March. And you could see that the last move seen last later part of last week, the lower it shaped a lower low, but however the RSI, the 4-hour RSI start to shape a higher low. So this is what I call a bullish divergence, indicating to us that this down move over here from the 3rd of June all the way down to the 17th of June last week, the downside momentum has starts to lose, we call it has start to ease. That means, i.e., a downside momentum has starts to abate, where potentially it could actually support our preferred bullish scenario potentially for a at least a we call it a kind of a rebound for this week. So all in all, right, we are taking things one step at a time. That means we're not saying that intermediate V-shaped recovery from here. And actually, there's no proof to say that there's a V-shaped recovery yet. But we're taking things one step at a time, using 3580 as my key medium-term pivotal support for this week, looking for a push up towards 3840, a break above 3840 to take us up potentially higher to 3980, followed by 4075, which is so close to the upper boundary of this minor descending channel, and as well as the former range support that actually triggered that recent steep decline, now acting as a resistance at 4075. But however, if we start to see a 4-hour close below 3580, then we could invalidate this bullish recovery scenario for an impulsive, we call it a continuation of this impulsive downward sequence towards the next support level at 3470 slash 3430, and even much lower towards 3250. So now moving on, next will be the higher beta Nasdaq 100, which is consists of this growth stock. So if you look at, in fact, Nasdaq 100 actually outperformed last Friday. So actually give us a bit of confidence, saying that hey, the worst hit index has started to actually turn around a corner, at least from a short to medium term perspective. So similar elliott wave and fractal analysis as this Nasdaq 100. If you look at it graphically, it actually confluence with this swing low of 30th of October, and you get that 0.382 FIBO extension at 10,960 as well. As well as the RSI right now is in fact shaping a kind of a bullish divergence, where we start to see a lower low that is being depicted on the price section of the index, but however the RSI starts to shape a higher low. right at the oversold region. So let's take a look at the 4-hour chart of the Nasdaq 100. So I could see this Nasdaq 100, the 4-hour very clearly shaping that bullish divergence, indicating to us that down move from 3rd of June is losing downside momentum. So using this 10,960 as my key medium-term pivotal support for this week. So we're looking for a push up towards 11,730, a break above 11,730, potentially could take us higher in first step towards 12,070, followed by 12,450. But however, if we start to see a kind of a 4-hour breakdown below this downside trigger level at 10,670, we could actually resume this impulsive downward sequence towards the next support level at 9,800 slash 9,650 next. So now moving on next to the Hong Kong 50 index. So if you look at the Hong Kong 50 index over here, last week it actually drift down towards the lower boundary of this we call it a potential triangle range configuration that is in place since the low of 15th of March 2022. So in fact, if you look at the price action of the Hong Kong 50, which is also the the China-related stock indices, actually performing much better as compared to the US major indices, where all of them the last 3 weeks of whole start to shape lower low. But whereas the Hong Kong 50 index has been holding above the 15th of March 2020 low since then. So it's inside this ascending triangle range configuration. So what we do over here is that I'll be using the lower boundary of this ascending triangle range now at this 9,900 as my key medium-term pivotal support for this week to play a push-up towards the upper limit of this range configuration resistance, which is at 22,260 slash 22,640. And also this RSI also pretty much positive, bouncing up from the oversold region that was actually hit earlier last week on 30th of June, and since then it managed to shape a higher low, and right now another higher low is being formed as well, indicating to us that there's some form of uh, a short-term upside momentum that is coming back into the uh, the Hong Kong 50 index. But nevertheless, we will not, there's no clear sign that it's going to break out above this upper limit of this ascending triangle range. So for now, we are looking the potential upside to be capped by this 22,260 slash 22,640 for now. So, but however, if we start to see a 4-hour close below the 9,900 level, all in all, we could potentially see a further drop towards this that will be a very pretty much choppy down move to retest the 12th of May 2022 low of 19,165. Now moving on, next will be the next major Asia indices that I'll share with you. The major index that I'll share with you, pardon me, will be the Nikkei 225. So if you recall, last week the Nikkei 225 we were bearish, and it actually hit our support level, which is at this 25,700 level. So all in all, right, which is this level here, 25,700. So it actually managed to come down and hit this level. So right now, all in all, right, it's kind of a still trading within this choppy range configuration after a failure bullish breakout on 6th of June. And if you could see the RSI right now is also coming very close to its oversold region level, the oversold level that previously saw a rebound thereafter on 28th of Jan 2022 and also 8th of March 2022. And right now it's approaching pretty much close to this a level, oversold level, which is 28%, where thereafter potentially a rebound again could actually take place on the Japan 225 index. So all in all, what we could see over here is still within this range configuration. That means a big range configuration between 24,480 slash 24,180. Top side will be at 27,760. So in the shorter term, right, if we dive not deeper into the shorter term, so I could see in the shorter term, the recent down move over here, we could see, okay, from the low of 15th of Jan and last week low, 16th of June, lower low, but price action start to shape a price action shape a lower low, but the 4-hour RSI start to shape a higher low right at the oversold region, which actually indicate to us this down move here is also losing downside momentum as well. And what surprisingly in today's Asia session, yes, we see a kind of a sell-off again in the first half of this today's Asia session. But if you look at the 4-hour RSI, the 4-hour RSI is actually not shipping a lower low below the low of 16th of June. So still indicating to us that this downside momentum here of this decline that was has taken shape since 9th of June 2022 high, the downside momentum is actually easing. So all in all, what we could do over here is that I'll be using 25,055 as my key medium-term pivotal support level for this week, which correspond to the range, the swing low area of 11th of March and 15th of March, and also a couple of Fibo extension level that is confluencing at 25,055 closely as well. So looking for a potential minor bounce this week to actually take us higher towards the upper limit of the range, the range configuration in first, 27,230, then followed by that swing high, the minor swing high of 16th of June last week at 26,700. But however, if you have a 4-hour close below 25,055, then we could see a further drop towards the lower boundary, towards the we call it the multi-month range, lower boundary of the range support at 24,500. Then a bit lower will be 24,180, 24,090 if 24,500 cannot hold. Now, the last one will be the German 40 index. So the German 40 index has a pretty much similar configuration like the Nikkei 225, but it's more bearish. Why? Because it actually broken below the the mid-May or the 10 May low level. All right. But whereas the Nikkei 225 is still holding at that level at this point in time. And also, if you look at the 4-hour RSI, pardon me, the daily RSI still have a bit of room more to go before hitting a key corresponding support level at the 21% and 20% level before indicating to us there could be a bounce taking shape. So all in all, right, last week, if you recall that we played that bearish down move to see a further a leg down to hit that this 13,020 support. So that level has already been met. So given that now on the daily elements is still pretty bearish, there's for it to actually potentially go down to test this 7th of March swing low area, which is at 12,430. And but however, on the shorter term, right, we see signs of a bit of a positiveness where the price action starts to shape lower low late last week, or which is this Friday low, lower low. But however, the 4-hour RSI starts to shape a higher low instead, which is that bullish divergence, indicating to us that in the shorter term, this downside momentum has also started to ease as well. But given that the the daily RSI in the daily chart, or daily RSI in the daily chart, daily RSI is not so encouraging to look for a potential bounce from here. So given that it's kind of a mixed element, so we rather turn neutral for now first between 13,680 and 12,940. So if we start to see a 4-hour close below 12,940, then we could see a further push down to retest the swing low area of 7th of March, which is at 12,500 slash 12,430. But however, if we start to see a 4-hour bullish breakout above 13,680, the upper limit of this neutrality zone, then we could see we call it a extension of this further push up towards the upper limit of this range configuration at which is a multi-month 3 months range configuration at 14,320. Then above it should take us up higher towards 14,700. So to sum it up, all in all, what we could see is that the pretty worst hit index so far in the last 3 to 4 weeks was the US stock market, the major US stock indices. So they already reached key inflection level. So in terms of an integrated technical analysis approach, that means I'm taking into graphical support level, graphical analysis, combination with momentum analysis, and as well as the Elliott wave and fractal analysis approach, we have started to see a key inflection level where potentially the US stock indices could actually shape a potential 1 to 3 months corrective rebound from here, but not a major bottoming process yet. to actually retrace certain we call it, some portion of this major downtrend that is in place since the start of this year. That means close to about 6 months of downtrend. And the one that is outperforming will be China-related stock market, where it's being evidenced by the price action of the Hong Kong 50 index. All right. So with that, I wish you all a great week ahead, and I see you all again in my next video.